Good afternoon. Thanks for joining us today. We have an update on Mako Mining with CEO Akiba Leisman. It's exciting times because I think first gold pour is imminent. This webinar is mostly for people that know the story a little bit. If you're not familiar with the story, I would encourage you to check out some of the previous webinars that are posted on the Adelaide Capital YouTube channel. This presentation will contain forward-looking statements. You can find those on the company's disclosure on their website. And there will be a Q&A period at the end, so feel free to input your questions in the Q&A box. And with that out of the way, I'd like to introduce Akiba Leisman, CEO of Mako. Hi, Akiba.
Hey, how's it going, Deb?
Good, how are you?
Pretty good.
I think you've got some exciting news for us and some updates and some visuals as well, which I'm looking forward to seeing.
Right, we'll see if the technology works. I'm not going to go through the full presentation because I think most of the people on the line have heard the story before. I do want to kind of frame the virtual tour that we'll give you of the mine in a second, provided that the technology actually works over here. So what you see over here is a picture from a few weeks ago over at the mine. The plant, the 500 ton per day facility that we're building right now is essentially complete. Tailing storage facility complete. In the mine, we've released the first 5 half benches of production coming from that mine sitting in stockpile right now. We currently have over 5,000 ounces of gold waiting for production through our mill, which actually started a couple of days ago, running through the mill with the anticipation of first small gold pour probably sometime this weekend. So for those that aren't familiar with the story, the way that I like to describe it is that we're doing 3 things in northern Nicaragua. First and foremost is building that 500 ton per day mine that you see up in your screen. But secondly, and this is kind of more important for the company's long term, is that we do think that we have the ability to find additional deposits elsewhere in our land package. So we have what we would consider to be a deposit right now, Las Conchitas, a few kilometers to the south of San Albino, our primary mine. We're going to be spending this year a lot of time and effort and capital to start infilling Las Conchitas into a compliant resource for some time in early 2022, such that very end of 2022, we'll be mining at 1,000 tons a day between San Albino and Las Conchitas. And thirdly, and probably most importantly about this company, is that we do think that we're sitting on an orogenic gold mining camp over here. So we start at San Albino. It's going to be 500 tons per day. 9.5 gram a ton open pit deposit, making it the highest grade open pit mine in the world. The ability to expand that upon exploration success at advanced stage exploration assets like Las Conchitas, and then eventually to find additional deposits elsewhere in our land package, which currently amounts to about 188 square kilometers. We raised US $55 million to get here, $40 million in equity and $15 million in debt. I'll go over the balance sheet with you later in this presentation. So currently, as of this morning, we have about US $2 million of cash on the balance sheet. So we spent a little bit more money than we anticipated. Not so much because the project is over budget. So when I first laid out the schedule of San Albino, the 500 ton per day build out, it was anticipated, and this is going back in August of 2019 when I first took over as full-time CEO of the company. It was our anticipation that it would cost US $28 million to build everything associated with that 500 ton per day plant from the capital that goes into getting that mine delivered, but not including the infill work that really served as the bones for the redo of the resource estimate that we put together last year. Our budget right now is coming in about $28.8 million. And if you think about what actually happened from between August of 2019 to today, so first of all, the global pandemic. So imagine building an operation like this, truly in one of the most challenging environments over the course of the last 100 years, of which Nicaragua was a particularly hard-hit country. And then 2, we got back-to-back hurricanes, major storms. So to put this into context, Nicaragua was hit by a Category 3 or greater major hurricane 7 times in the last 100 years. We had 2 direct hits from major hurricanes 2 weeks apart, truly an unprecedented situation. We were very fortunate that there was no material damage to the plant, certainly not the equipment and even to the construction schedule. But we did have to dig up quite a few diversion channels because we probably got in aggregate of about 13 inches of rain between the 2 storms. And certainly from our schedule, at least internal schedule, we've probably taken an additional 6 weeks before we were internally modeling when we were going to get into first gold pour. So I told the market we would be in first gold pour in January of this year. I started that schedule in June of last year, but really in my back pocket, I kind of was expecting to have gold pour in December, mid-December of last year. So certainly the hurricanes have pushed us back to the tail end of January. So even though we are going to be pouring gold in January, it will be a January 30th or 31st event. And you'll see exactly where the plant is when I go over the video tour of the mine. Everybody is aware of our key operating team. Obviously, I'm the CEO of the company. Jesse and crew, our chief operating officer, truly impeccable operating team, the ability to deliver these small and medium scale mines in the Americas. This is probably the 12th mine that their team has assembled. And this one was done and delivered under very arduous circumstances. Now, the other thing going on with Mako right now is that we have a single rig that is focused on the exploration of Las Conchitas, a couple of kilometers to the south of where we are. It is anticipated that as soon as the mine is in positive cash flow, which we anticipate in early Q2 of this year, when we are in commercial production for the mine itself, and I'll go over the ramp-up schedule in a bit, we are going to start exploring this property such that Las Conchitas can get into a compliant resource by early next calendar year, such that we can be mining it by the very end of 2022. So the board has approved a tentative budget that will basically be somewhere between 50 and 55,000 meters for the year. In aggregate, it will cost somewhere between $8 and $8.5 million of exploration capital. So one of 2 things can happen. Either we can tighten our belt and then we can wait a few months before we start spending the exploration capital, or we can take a small scale working capital facility with no equity, no warrants, certainly no hedging associated with it, just straight debt on the back of this, and with a 5,000 ounce stockpile. It's something that we're seriously considering right now to accelerate it. So it's a choice at this point, which hasn't really been decided upon right now, but we're going to go in one of 2 directions: either start exploration now or wait for exploration, massive exploration, going from 1 rig to somewhere between 5 and 6 rigs, sometime about 2 or 3, maybe even 4 months from now, relative to how the mine is ramping up. But you can see some of the exploration results that we've been putting out with a single rig. Remember, this is from 1 rig that we have over here, hitting 45 grams gold over 1 meter. That was situated just a few meters from surface. You can see over at Las Conchitas on June 15th, we had 23 grams over 5.5 meters. On June 22nd, we had 40.5 grams over 4.5 meters. You can go through our press releases right now. We are focused on 3 of 9 advanced targets over at Las Conchitas. And as part of that 50 to 55,000 meter exploration program that we anticipate doing this calendar year, somewhere around 50 to 60% of that is going to be related to the infill work over at Las Conchitas, as well as targeting some of the other 6 targets that we have not been focused on over the course of the last couple of years. We're situated in northern Nicaragua. Nicaragua has been a fantastic jurisdiction to operate in. I've really been happy with how the government is supportive of mining. I've been really, really happy about the local population, their skill set, their work ethic. It's really been fantastic across the board, top to bottom, working in this jurisdiction. So I'm very much looking forward to going back to the mine, which I really haven't been at for the last 12 months. So as soon as we actually have the ability to get in and out of country in a fairly easy way, hopefully by next month, I'll be excited about holding that first bar of doré coming from the mine as it's ramping up. Although we do anticipate having a small gold pour sometime this weekend. So, what have we mined to date? I put out a press release last week for these 5 half benches that we put out, 2 full benches, 6 meters from 616 meters of elevation down to 601 meters of elevation. So the first 9 meters of a small part of the deposit, we've pulled out 3,300 ounces of high-grade gold that is grading in excess or right around 1/2 an ounce material. So this puts it by far as the highest grade open pit mine globally. Now, we put out these numbers is that there's always been a big question mark about whether we can mine this deposit without taking on a substantial amount of mining dilution. Hopefully, and also with respect to the resource, hopefully a lot of those questions have been answered with the Mine Development Associates resources that we put out last year. So I fully endorse the numbers that were put out by Mr. Stercelli and the MDA resource that we put out last year. But I said in that press release when that went out, we anticipate positively reconciling on grade because some of the assumptions that were going into that model were by design conservative when it came to modeling how we are diluting the vein as we mine it. We were putting in 50 centimeter tolerances around our high grade vein over here. I can tell you in the first 5 half benches that we've mined, we are mining tighter than 50 centimeter tolerances with respect to getting close to the vein, maintaining much lower levels of dilution. And even though this happens to be in a particularly difficult part of the mine to be mining, the average width of the San Albino vein is about 1.25 meters. We are mining an area right now that's about 0.7 meters. Towards the end of this year, we're going to be mining a zone called the Porcelana zone, which is averaging over 2.5 meters. So we are controlling mining dilution on an extremely narrow part of the ore body. And as we get into thicker zones, like we will in late Q3, early Q4 of this calendar year, the mining is just going to be, by definition, easier. So if we are positively reconciling in grade like we are right now, if we are controlling dilution to levels that are less than what MDA was modeling, that by definition will mean that when we are in the easier part of this mine to mine later this year, it's going to get even better than what it is right now. So these are extremely high grades. We're starting to run this through the plant right now. Our gravity circuit is completely functional. We actually have some concentrates in the process of being dried right now to be put onto our shaking table. And again, we'll have a small gold pour this weekend, and then we'll ramp up production really through March and then commercial production in early Q2. Now, again, at 9.54 grams gold, that makes us the highest grade open pit only mine in the world. There is a development project on initially open pit called Kakura that has a 10.1 gram measured and indicated category for their open pit up in Siberia. I have gone through their numbers. I can state that if they were taking the same modeling approaches to what we were for our levels of dilution, their grades would be lower. So even from a project perspective, I do think we are the highest grade open pit mine in the world. San Albino and everything that we're seeing about from Las Conchitas is just confirming that there's going to be more of the same over there, and then eventually as we get to the northeast. So like I said, we are going to be budgeting somewhere around 50 to 55,000 meters of core drilling that will start in earnest as early as now, but that will be conditional on getting a short-term working capital facility, or starting sometime in mid Q2, and then we'll ramp up exploration for that. So right now we're actively deliberating about what is the more sensible of the two decisions, and then over the course of February, we'll certainly update the market into where our thought process is evolving at that point in time. About 55 to 60% of that drilling is going to be focused on infill and greenfields exploration work over at the Las Conchitas area. About 30% of that is going to be focused on satellite deposits at the San Albino area. And this is kind of an important point over here, right? So we put out a fairly small resource, about 280,000 ounces in all categories, open pit and underground. A substantial amount in the measured and indicated category itself. But the 2015 PEA had 4 separate pits associated with it. We only focused on 2 of them. So then the question is, what actually happened to the other 2 pits? They didn't disappear. It was just that they were not drilled enough for us to have a good handle on the geological controls of those two particular pits that are directly along strike of the San Albino and the Aras veins that you see over here. So even right now, using some of our production oriented drills, we are sampling in those areas. And I can tell you right now, San Albino ain't just the west and the central pit that you see on this chart that made up the entirety of the resource that we had over on that MDA model. There's going to be more open pittable ounces even at San Albino. It is completely open along strike for additional open pittable ounces. And then obviously with these orogenic ore bodies, the dip potential of these are measured in the miles. So if we can demonstrate the economic viability of going underground, you take whatever we delineate in the open pit and then effectively multiply that number by 5 in terms of what the potential is to be mining this at some point underground, although we don't really anticipate that happening for 2 or 3 years at a minimum from now. So again, San Albino up on top, plenty of room for expansion even over there. That will probably take about 15,000 meters of our drilling budget to focus on the satellite areas, and then even to do some infill work on the underground work. Then there's Las Conchitas, which will probably be a good 30-ish thousand ounces of those meters focused over there. And then probably most importantly, in terms of what we have, for the first time ever in our company's existence, there exists 0 drill holes outside of San Albino and Las Conchitas. So the first time ever, sometime probably in very late Q2 or early Q3, we're going to be putting the first drill holes inside on the northeast extension of the San Albino vein, which we've already traced through surface sampling, an additional 6.7 kilometers. You can see that on the third press release on this screen right now. 6.7 kilometers on the other side of the river. We've traced this vein. I encourage you to go to that press release that we put out, full map, where we've had a multitude of double-digit grade samples from our geologists going in, and it looks like certainly a permissive structure that's going all along the northeast. And 6.7 kilometers is really only constraining it between the two rivers, the El Jicaro River to the left and then the Murro River to the right. So that doesn't even include the 230 meters of strike that makes the San Albino deposit, and it certainly doesn't include anything to the northeast of the river as well. So this is really what the prize is. We're starting with a small mine that will allow us to generate a substantial amount of cash to go and invest in everything that we want to invest in. The $8 to $8.5 million exploration program over at Las Conchitas, the regional development work over here, having an abundance of cash flow even beyond that, based on the grades that are going to be going through this 500 ton per day facility. But that's really just to get us started. This is really not a company about the 500 ton per day project. As we mentioned in the first slide over here, this is a stepping stone to get us to that 1,000 ton per day level, such that we can be a gold mining company that will have a material mine in the context of global mining, and then to actually get after the real prize, which is to find out what this district is holding, because these types of sedimentary hosted orogenic deposits are unique for this part of the world. It's a very, very different type of geology, and the entire land package across the full 23 kilometers of strike is effectively permissive to find additional deposits very similar to what we're mining right now over at San Albino, what we will delineate over at Las Conchitas, and we're going to be finding a multitude of more of these deposits. So with that, assuming that the technology is capable of working, I'll give you a little tour of the mine. So let's see. All right, so let's go through. This is kind of like a bird's eye view in terms of what you can see. So you can see the plant over there. Everything on the front end through the CIL circuit is effectively complete. We'll zoom in a second to see if the mills are turning, but I think they may be. They were earlier today. I'll go in detail over that circuit itself. And then what we have in the middle is our dry stack tailings storage facility. And then zooming out a bit, you can see the mine over there. So let's give a detailed tour of our circuit. Okay, so look at that. The crusher is turned back on. So first of all, we are starting with a stockpile of mineralized material over here that you can see those dump trucks are bulldozing right now. I should say the bulldozer is bulldozing right now. That's going into our primary jaw crusher over there. 80% of the material going into that primary jaw will be sizing above 2 inches. That material will then be going into our secondary cone crusher that you see over here that will take everything down to 80% less than 3/8 of an inch. That material is getting crushed and put into a crushed stockpile right above 2 separate reclaimed tunnels, which will have a direct feed into the mills. So let's see if the mills are turning. So we'll get a better camera angle for there. Let's see, where are we, guys? All right, so from that reclaimed tunnel, we are going to, you can see that reclaimed tunnel moving over here. We have, oh, look, the mill is actually turning. So we have 2 separate mills. One of them is now fully operational. The other one has to have its motor slightly repaired, which apparently is now completely repaired in Managua. So that should be headed to site sometime next week. So between the 2 mills over here, eventually we'll be able to mill this capacity at these types of grinding sizes at 1,000 tons a day, provided we get a little bit more electric generation capacity. Certainly between the 2 mills that we have operationally over here, we have a lot of flexibility. Each one can handle about 500 tons a day. So probably for the first year and a half, we'll be alternating them, potentially running it slightly above capacity based on the limitations that we have for electric generation capacity itself. But it's really, we're really fortunate to have 2 separate mills right now. And as you can see, it is turned on, grinding this material to 105 microns. That material is then going to be put into a slurry. It will be taken upstairs to this cyclone and then going into a Nelson concentrator, a very high-powered vortex system centrifuge that will be able to separate the heavy materials. Gold, our gold is associated with galena, so there's a lot of lead in this deposit. It's also associated with spharolytes, so a lot of zinc in this deposit. So the heavy metals will then get separated into a concentrate. That concentrate will then get delivered to a dicer table, a shaking table that you see in the refinery in the back. So we have very strict security protocols over here. So it looks like people are getting prepared to make some last minute adjustments to a furnace that's getting its final plumbing attached over here to anticipate for the first real gold pour. But we do have some concentrates sitting on surface in our safe right now. And then we're going to have a very, very small smelt sometime this weekend. And then we're going to be ramping up with everything that we need from there late in February and eventually getting into commercial production in early Q2. So the tails of the Nelson concentrator will then go back to the carbon in leach part of the circuit. So you can see our thickeners over here, that blue tank, that will thicken up that slurry a little bit more. And then you have a series of 5 tanks. We'll need 500 tons a day, probably just over 3 of them to have an appropriate amount of residence time to give us our full recovery. So there's going to be carbon inserted into this, little pieces of charcoal from Southeast Asian coconut shells, and some cyanide, sodium cyanide we put into solution in these tanks, which are now completely filled with water. The gold that does not report to the gravity concentrates will report here. The gold will get dissolved by the cyanide, and eventually it will be adsorbed by the carbon in these tanks, and that's both a chemical reaction, so there is a redox reaction that puts it into the carbon, and also a physical reaction. So there's little pits within the carbon that also physically attract the gold particles on an interstitial basis. So after you're in those tanks, you will then go to our stock tank, which is the beginning of our detoxification plant over here. You get a better view from the other camera angle. So all of that material will then report to over here, where we can detoxify it for any activated cyanide within the circuit to make sure that everything is clean and ready to go. And then it is eventually going to go into this little piece of equipment, which is our filter press, which is going to press out enough moisture from that material such that it will be capable of being stacked on our tailings storage facility. I would say in terms of impacts from the storm, this is probably the most of the material impacts. I think some of our construction work was definitely delayed associated with that dry stack tailing storage facility. We're actually okay. Like, as you can see, the gravity circuit is up and running. So we'll process stuff for the gravity. We have enough storage space within the tanks and the stock tank, probably to handle a good week and a half, 2 weeks of basically just startup operations within the CIL part of the circuit. Then eventually that filter press needs to be operational. So hopefully that will be run seamlessly, in which case we can wind up drying out that material and eventually stacking it on our dry stack tailage storage facility over here. And as you can see, some of the inner plumbings over here for any contact water will come out here. We have plumbing underneath those right on top of those liners that will report to a contact pond right over here. So if there's any contact water from the material in the tailings that for whatever reason has material that is above specifications relative to our permit, which is a very, very stringent permit in that regard, we'll have the ability to further detoxify that material before it gets discharged from anywhere in the facility. So in terms of environmental safety and soundness, this is about as environmentally friendly as you possibly can manage your tailings facility. So now the good stuff, where's the gold coming from? So as you can see over here, we are we're currently not mining ore because there's really no reason to be. We have enough stockpile for 2 months. And you can see we've taken out 2 full 6-meter benches that we mine 3 meters at a time. There's one right beneath this admin building and communications tower that you see over here. So we're taking out took out that 6 meters over here. I believe that was grading somewhere in the neighborhood of 12.5 gram material. The second 6-meter bench that you see over here, that was grading 19 gram material. And then finally, we put out that first of the 3-meter half benches of the next bench that was grading approximately 13 gram material. And again, all of these numbers are fully diluted, right? So this is actually what we're mining. The actual grade of the vein within these deposits was substantially higher than even the half-ounce material that we have right now. So this is an extremely high-grade deposit. That 3-meter half bench that you see, this little umbrella over here, that half bench that isn't mine right now has a net realized value in excess of US $1 million. That's just 1/2 of one bench. So we're effectively mining money over here. So all of that get taken on these trucks, which are right now focused on some waste development such that we can get a handle on the startup when we get up and running. So full fleet is operational. Obviously, these are highway rated trucks. They're taking somewhere between 35 and 40 tons each. So a very efficient fleet. We just renegotiated our mining contract with a wonderful contractor that we have from the local community that we've trained. So everything is up and running, and as far as you can see. Now remember, the entire objective of doing this was really just to get the first stage of the company done. So we have a 500 ton per day plant that's now operational. We're mining. Obviously, you can see with your own eyes, the mills are turning. The gravity circuit is fully operational. We've pulled gravity cons from that gravity circuit over there. The other buildings that you see, the one closest to you, that's our administration buildings. That's where all the head honchos are assembling. The first building that you see on the big building that you see on the left is our laboratory. So we have the ability to process somewhere in the neighborhood of about 250 samples a day. So we have our key head of metallurgy who's now helping commission the lab over here, but we've been processing our own assays over there really for better part of the last 2.5 months, and now we're ready to have a full 24-hour shift that's going to be taking all the assays from mining, right? So we're taking the way that we actually mine this deposit. For those that weren't aware of my analog before, is that the key risk that San Albino has, or always had, was the ability to mine these high-grade veins without dilution. So in order to do that, you really have to have a very effective grade control strategy to make sure that you're mining the good stuff and not mining too much of the bad stuff. So if you can imagine it like this, we have a series of narrow veins. By narrow, I mean somewhere in the neighborhood of about 1.25 meters on average. On average is a little bit of a dangerous word, because the areas that we're mining right now is about 0.7 meters. And that was modeled. That's not a surprise. We happen to be in a skinnier part, albeit higher grade part of the deposit than normal. And then outside this 1.25 meter on average vein, that generally is grading somewhere between 15 and 17 grams, or series of veins that's grading between 15 and 17 grams, there is a geochemically distinct hanging wall and footwall on either side of the vein. You can see with your own eyes, and then you can see with assay results that it is mineralized. It's very distinct from the country rock. So how do we know that we're mining the good stuff, right? So first of all, we have control with our resource. We have drill holes that somewhere about 52% of all of our blocks in our block model to estimate our resource is coming from data inside of 10 meters away. Over 80% of the data in our resource is coming from data 35 meters away. So this is a very, very well drilled out deposit. Now, so that's the first area of control, is that we spent a lot of time, effort, and money putting out that MDA resource, which now has some modicum of predictability in terms of how we mine this. So the next thing we do is that we put in blast holes. So blast holes are just what they sound like. You put a hole in the ground, and then you load those with explosives. But you also have the ability to sample. It's basically like a mini reverse circulation drill. So you have the ability to sample some of these results, which gives a user a fairly decent proxy for geology, right? So you know when you're in host rock, when you're in hanging wall, when you're in vein, when you're in footwall, and so on and so forth. We have the ability to sample on those blast holes every meter. So that's good, but not perfect. And the reason why it's not perfect is that if you have a 1.25 meter vein, on average, here we're like a 0.7 meter vein, and you take 1 meter samples, by definition, that sample is going to have a significant amount of dilution associated with it. So even if it's a perfect sample, you do not really have a great estimate for grade in those blast holes. So what do we report? I put out 3 separate press releases in terms of the 5 half benches that we mine. So what do we actually report? We don't report based on blast holes because they're giving incorrect information. But what blast holes are good is a good understanding for geology, and it can tell these guys, you know what, set off some explosives over here, and here, and then have our geologists open up the bench so we can expose the zone along strike. So you can actually see the opening of the vein on a single mining section. So from there, we have a geologist, very, very well-trained geologist, that is then going to be taking, first of all, he'll be marking with can of blue spray paint. That's the contact between the host rock and the hanging wall. That's the contact between the hanging wall and the vein. That's the contact between the vein and the footwall. And every 4 meters. So you can go take a look at the QA/QC disclosure that we have in those press releases. But every 4 meters, we take a channel sample that's geologically controlled, respecting the geological boundaries in terms of what the geologist is interpreting. And every 4 meters, we're taking a sample along that ground without any dilution in the sampling itself. That is what's being processed in our lab. That is the results that we are going to be using to reconcile to our resource model. And then finally, we have a 4th layer of grade control, in that we have a series of samplings that gets done at the crusher level. So you can see over here at the crusher, we have belt samplers that are put in place right after that secondary cone crusher over here that's grading what's actually getting delivered into the crusher. And then we have another belt sample on each one of those reclaim tunnels. So we know exactly what's going into either one of those mills. And that's going to be the sampling that we do to have metallurgical understanding in terms of what our actual recovery factors are for the mine. So having that laboratory functional on an operating basis is absolutely essential to everything that we're doing. We could not be mining this thing in any commercial capacity without that functional lab. It's been up and running on a single shift from about 4 months ago. And then Russell, who's down at site right now, is finally certified this as a full 24-hour a day, 3-shift lab that's capable of processing over 250 samples from our operations. But even we'll take some exploration results to get ahead of the game over here. So we'll do some spot checks to see if we're onto something from the exploration side of things. So all of that gold is then going to be coming from the carbon that's in the system over here, and the gravity concentrates are going to be coming from that Nelson concentrator. And then from there, we're going to have the concentrates themselves will go on a shaking table and then directly into the refinery, that building that you see over there in the center. And then the gold that's loaded to carbon will then get stripped with a very hot caustic bath. And then from that, we'll put that into an electro-winning circuit over there. And then that electro-winned gold will go into the refinery. We also have a little bit of a newfangled technology for some of our gravity concentrates that we have an intense cyanidization reactor called an Acacia sitting in the refinery, which will further enhance some of the recoveries from the gravity cons and middlings that are coming from the gravity circuit. And this becomes important for a whole host of reasons. The main driver of costs for our operation are actually not mining. Like, we have a fairly high strip ratio mine. In the first year, it's going to be in the high teens, and then life of mine will probably be in the mid 20s when all is said and done. But guess what? Based on these grades, in terms of a per ounce cost, it is a nothing burger. Whether this is an 18-to-1 strip ratio mine or a 24-to-1 strip ratio, it really makes, obviously it makes a little bit of a difference. Every dollar counts. But in terms of the grand scheme of things, it's not going to be making that much of a difference in terms of our costs. What does make a difference is what you see over here in terms of the processing side of the facility. But if you are able to get an incremental bit of gold out of your gravity concentrate, out of your Nelsons, out of your Acacia circuit, through there, it means you do not have to put that material through our carbon in leach processing plant. It means you do not have to put incremental cyanide in those tanks, which is a big cost in and of itself, not just from the cost of cyanide, but also at the end of the day, we're going to need to detoxify this. So all the detoxification chemicals that go in, the more that you get out in terms of gravity, not only is it quicker recovery, it also dramatically lowers the cost of the operations. And then also makes this even more environmentally friendly because all of the nasties that we have to use in the extraction of gold is limited simply because of the efficiencies that we're working on the gravity side of things. Now, all of this plant is capable of being expanded to 1,000 tons a day. You can see, obviously, we have the 2 milling circuits. We'll have that second mill operational probably towards the end of February, thereabouts. We have 5 tanks. I said we need probably about 3 and a bit to run this at 500 tons a day based on our expectations of residence time. Like obviously we may change the recipe a little bit, which is why you want to have 5 and not, first of all, you never want to have a bit of a tank. So it's either 4 or 5 is the choice, but we have 5, which gives us a little bit of extra capacity over there. But if we actually want to have 1,000 tons a day, we need to run this with 5 tanks. So you can see the foundations poured for those incremental 5. All of the infrastructure is in place. That crusher can easily handle 1,500 tons a day. You can see it operational, probably running at about 50 tons an hour, maybe even more than that, feeding into 2 mills. Each individually can run at 500 tons per day once we have adequate power to run it fully loaded for both. Right now we have power generation capacity just for 500 tons a day and maybe as much as about 700 tons a day running 2 mills simultaneously. So 1,000 tons a day, very limited CapEx in terms of getting it up and running, and everything that we have on the property. I don't care if it's Las Conchitas, I don't care if it's 23 kilometers away. Everything at these kinds of grades are more than within a trucking distance to this plant. So that's basically what we have over at Mako. So obviously exciting times, a lot of things going on right now. Everybody should give a big round of applause to all of these crew members over here who are doing a fantastic job keeping the operations running smoothly and certainly holding the fort when we weren't able to actually get in and out of country when the pandemic first started between March and August. Now things are stabilizing quite a bit. So we have the ability to run this very efficiently. And again, all of this was being built in the middle of a once in 100-year global pandemic and 2 100-year storms hitting this property within a 2-week period, right in the middle of the meat of our construction. So these the Mako crew, if you will, really went above and beyond to deliver what you see on your screen today.
Thanks, Akiba. That was really thorough. I think the audience really appreciated having a virtual tour. So I had some questions that came in before, and I've got some questions that are coming in now. There are some repetition questions, so maybe I can just get you to run through the most commonly asked 2 questions, really. I know you've stated them at the beginning, but can you just remind us when you expect the actual mining of gold to begin in quantity, and what's your ramp-up timeline?
So in terms of a beginning, right? So we've done that. So we've been mining the high grade really since August of this year in stockpile. You can see it actually going through the mill right now. Actually, some of that stuff going through the mill because we're testing the gravity is high grade, even though the vast majority of the stuff that's going to be going through the circuit for the next 2 months will be the low grade material, the historical dumps that were left over by the Spanish and the 1920s producers in this particular area. So we have been mining, and we can mine whenever we want to, right? There's a half bench that's right there waiting to be drilled out. So that half bench will be taken. In terms of how the year is going to develop, so you can see there's a fault running through right over here, kind of just on the side of the benches. So you have probably another 3 or 4 high grade benches. Then we're in what we call the dead zone, because there's a fault offset over there that then needs to be removed. And then we're in the real good stuff, starting in late Q3 called porcelana, when we're in effectively an area of the deposit that's 3 or 4 times, maybe 3 times the thickness of what we're mining right now, but similar grades. So the productivity coming from those zones are going to be even greater than what we have right now. To get us to 500 tons per day of ore based on an average thickness of 1¼ meters will require mining from 3 faces simultaneously. So we can be at 2 faces if we're in a thick zone, maybe even 1 if we're in some of the areas of porcelana. And then we'll need like 4 faces in the area that we're kind of mining right now. We have mine these zones with 2 phases, right? So there is going to have to be a ramp up on how we're going to get to this, but it's just a question about opening up additional phases. So we have 2 from what you see on the left, And then eventually you're going to get opening up some preliminary zones on the right. So if you get 2 from the left, 2 from the right, you're golden. You're at 500 tons a day. That'll take some time to develop. One of the reasons, there was many reasons why we developed a stockpile. One of the reasons was to allow us to have at least a couple month ramp up for us to do this. That stockpile plus a sub 500 ton per day mining rate will allow us to bridge the gap such that we're going to be mining or processing continuously at nearly 500 tons per day, really throughout the year. We're going to be at that kind of level in weeks. Now, in terms of gold production, that's different than mining. In terms of gold production, you have to be cognizant about what we're doing here, right? So we have 2 mills over here. So these happen to be used mills. So they were coming from a power company in the southeast of the United States. Perfect condition, even though these are like a 1983 and 1984 vintage. But they have liners on them, and the plastic liners on them, and then even the mills themselves have it's a metal mill, so there's like little pits over there. We have a coarse gold deposit over here. Now, we have some things that are great about a coarse gold deposit is that most of the coarse gold is well distributed, fine grained, so we don't actually have any nugget effect in terms of grade estimation or things like that. So to estimate the grade, coarse gold is not an issue. Where coarse gold is an issue is the mill, right? So at some point when you turn on a new mill, those flakes are going to get embedded into that liner, and the next time that you're ever going to see that gold again is when those liners are removed. So it would be dumb to start up an operation like this with high grade. And likewise, when you're in that carbon and leach circuit, you don't want to shock that system with a lot of coarse gold. That would be very difficult from a recovery standpoint in terms of how that cyanide is going to be able to dissolve the gold itself. So we're going to have to manage this with mostly low grade material, not what we call historical dump material. The locals call it concha material. That's grading on average about 2.95 grams gold. At that kind of level, we'll be profitable. But that's the type of material that we're going to be using to start up. So we're running a little bit of test work on the high grade, but most of that material that you see right there is the 2 to 3 gram stuff.
So just to clarify, you will be processing 500 tons per day by the end of Q2?
We're going to be processing 500 tons per day at the end of February, right? It's just a question about our mining rate is going to take some time to get up to 500 tons per day, and running the optimized blend grade between the historical dumps and the high grade will likely be a Q2 event. But in terms of actually getting those mills up to 500 tons per day, we're anticipating that happening in weeks.
Okay, and do you have a target production level for the year?
So I have to be a little bit careful on from a guidance perspective. Just you can't really pitch and catch over here, because we did remove the preliminary economic assessment associated. What I can say is that at 500 tons per day, right, at our estimated grade coming from the deposit, 9.5 grams, that is going to equate to an annualized run rate in the high 40,000 ounce range based on our expectations for recovery. Obviously, we're not going to be processing that high grade until early Q2. So that's really somewhere in the neighborhood of about 7 months of operations, right? So for 2021, you'd multiply that number by 7/12. And then there's also some low grade material that you see over here that has to be blended through as well while we're in the ramp up. So from the first year, you take that high 40,000 ounce a year run rate blended with there, and that's kind of the range that you're going to be from a gold production standpoint. And then everything that we're seeing with the resource model is that everything that we're seeing is that this is going to be positively reconciled.
Actually, let's take a step back and talk about geopolitics. Can you talk about the upcoming elections in Nicaragua? Anything that concerns you in regards to the political climate?
Yeah, I mean, there was social unrest in 2018. I think every country around the world, U.S. and Canada inclusive, is running a little bit politically hot right now just because of the ramifications of the global pandemic. I haven't seen any civil unrest really since late 2018 in the country. I think by all accounts, the FSLN will likely be the winning party in this November's election. I think there's a very reasonable chance, just because of his age, that it's Daniel's last term. I don't think that's unreasonable to say. So who knows, right? So elections can have twists and turns, as everybody should be well aware of. But we certainly have not experienced any negative aspects in terms of the relationship with the current government, and frankly, we haven't really experienced any local negative reactions to even people that may not be supporters of the FSLN. So our particular area in Nueva Segovia is diverse in terms of religion. It's a mix of Catholic and Protestant. It's a mixture of Sandinista and Reformer. Sometimes the towns don't like to talk to each other, but nobody really has a problem with us.
Okay, thank you. And when was the last time you were in Nicaragua, Akiba?
It's been in February, right? So it's now about 11 months. I usually was down there every 6 weeks. I was anticipating being down there actually now. It's actually not on Nicaragua, it was on the US side, where it became kind of a logistical challenge for me to get a valid PCR test from Nicaragua on the way back. I'll sort out those logistics such that I'll be at site next month. And I probably won't be there every 6 weeks like I was before February of last year until everybody is well vaccinated. But yeah, no, it's been a challenge to operate this mine. We were fortunate that the vast majority of our expats were down at site when the U.S. government changed. Most of our expats are U.S. based, and the ones that aren't are generally Mexican. But once the U.S. changed those rules, we were fortunate that everybody was down in Nicaragua already. It's not the easiest logistics to get people back and forth.
And have you had any employees infected with COVID over the last little while?
Yeah, luckily we've had fantastic doctors on site, so I haven't seen any evidence of unconstrained community spread. But certainly this virus is everywhere. That shouldn't be surprising to anybody. So we have very robust testing protocols over at site to the extent possible. We try to have social distancing to the extent possible, upgraded hygiene. But yeah, I think between our contractors, employees, and the community, we've had low double digits since the start of the pandemic. And so in this part of Nicaragua, it didn't look like it was nearly as well spread as it was in Managua, which really was struggling in the summertime of this year.
Okay. And then a number of the questions center around two themes. One is a potential debt facility. Can you elaborate on that? Any details or what you're thinking along those lines? Yeah,
it's still a TBD, right? So as of this morning, and that actually includes me sending down some cash to Nicaragua. As of this morning, we have about US $2 million on the cash. It's probably a little bit lower than I wanted it to be when we took the financing last year. I don't think there's any problem for us to really just tighten the belt as much as possible, and then wait till cash flow starts imminently in the next 6 weeks. But the problem with that is it does a couple of things. One, it really pushes back everything that we need to do on the exploration front. I would say at a minimum of 4 months, because it's not just about getting the cash flow from the mine. It's about making sure that you're comfortable that the ramp up is ongoing, and then make sure that you can actually make commitments to people to get the mine up and running. And furthermore, the stockpile that I released was only from benches that contained the San Albino vein. So we have about a 5,000 ounce stockpile just in that. We actually have more than that from the historical dumps that we mine outside of those benches. So we have over 7,000 ounces of gold sitting in stockpile right now that probably has a net realized value. If you blend it between the high grade and low grade, it probably has a net realized value of somewhere in the neighborhood of about US $9 million. So just like sitting there on the ground, nobody can get any ideas to take it, but eventually we'll process that through. So the way that we look at it is that if somebody gave us a choice to basically sell that stockpile without having to process it over the next 2 months, would we do it? I mean, the answer is like, of course we would. Like, how much will we pay to facilitate that transaction? That's a debate, right? So that's kind of what we're going at. One thing we won't do: no equity raise, nothing associated with warrants, nothing associated with hedging. So this would be a straight debt facility, and it would be a choice. But conceptually, it would be substantially less than the value of our stockpile.
And that stockpile is what, 2 to 3 months of processing at the 500?
Mm-hmm. Yeah, right around there.
And then I guess the other group of questions really is around valuation. There's a bunch of competing views. I guess, how do you think about valuation within the company right now?
1, 2, 3. I would put 1, 20 cents on the dollar. I'd put 2, 30 cents on the dollar. I'd put 3, 50 cents on the dollar, right? So this is where the debate comes around. By the way, this is the end of the debate. Everybody can say like what the pie is, right? But the real debate is, I don't give you value for 2 and 3, therefore I think you're overvalued. That, by the way, is an entirely logical thesis, right? To basically say number 2 and number 3 are worthless, and therefore you just have to look at San Albino and basically say, all right, so what exactly do you have? It's a 280,000 ounce resource. Yes, it's going to be generating, just on the back of what's delineated, somewhere in the neighborhood of a couple $100 million over the mine life, which is roughly the equivalent of our enterprise value at this point. So you basically say, I don't give you any value for 2 and 3. Do I think there's deep value over here? For me, it's like, I kind of know what's going on. And by the way, this is not like a pivot. This particular thing I've been talking about really since the time of the original management change happening in March of 2019, with really no adjustments to how I've been viewing the company. Is that I see Las Conchitas as a deposit today, right? If we wanted to, we can put an inferred resource on that, but we have a lot, much more stringent criteria before we put out even an inferred resource based on how we model these things. And also there are specific complexities with our geology that limits the ability to put out resources in a very quick manner. They have to be thoughtful and they have to be well drilled out. And then thirdly, the entire reason why we're involved in this in the first place is because we think this is an orogenic gold mining district. So the way that I approach investors is, it is on me. I think, by the way, you saw this on your screen. It's like we've executed on number 1. At this point, if nobody wants to give us credit for number 1, that's just willful ignorance, right? Because number 1 is actually sitting right in front of you right now. If nobody wants to give us credit for 2 and 3, that's okay. It's actually on me to execute, but it's always been part of our plan. I would say that any investor in a startup, which effectively this is, needs to be investing in the actual plan, right? It's never been our plan to build a 500 ton per day facility. It's been our plan to have a 500 ton per day facility serve as the fulcrum to expand this to 1,000 tons a day, and then prove that this is an orogenic gold mining camp that can be mining at that level for some level of continuity in the context of global mining.
So one of the things that I think would be really interesting, I'm not sure what the capabilities of your camera is, but I know you could certainly look at San Albino. So if you wouldn't mind redirecting it over to the mine site. I think it would be interesting to show the audience kind of the proximity to Potrerillos, I always say that wrong, and sort of where you think the some of the regional targets that you're going to be investigating this year, and also if you can even see Las Conchitas from the camera. I'm not sure if that's possible, but I think getting a sense of how close these other potential areas are would be really helpful. I know it's really hard to do if you're not on the ground, but you might be able to give it somewhat of a sense.
And I've always been spatially challenged, so it's not just equipment. For anybody that has the presentation in front of them, that's Rio Jicaro, right? So that's to orient yourself in terms of where that river is. So that's kind of going on the edge of our deposit, and then turning off from the east to west in this particular bend of a direction. The other side of that bridge, that's Potrerillos right there. So that's that. Las Conchitas, I doubt that you'd be able to see from this camera. That's our, that's kind of where everything is. But this is a real security camera. So you can see what's going on over there. Let me see, can you actually, well, Las Conchitas is in that general vicinity, but it's not, it's kind of like over those hills. Yeah, well, maybe not over those hills, maybe over those hills.
I guess the point that I'm trying to make is it's 2.5 kilometers. It's fairly close.
Let's see. So first of all, Calibra is doing an excellent job kind of managing the hub and spoke model. But one thing that actually jumps out about them is that their assets are 200 to 300 kilometers away from the processing plant, and they're dealing with grades substantially lower than what we're talking about over here, and doing it extremely profitably. So they should be applauded for what they're doing. So they're moving 4 to 5 gram material on highway 300 kilometers away. We're talking about 9 gram material as much as 20 kilometers away. The distance is an irrelevancy, right? The bigger issue is being able to drill areas out enough for us to be comfortable putting a mine plan around that, both from a permitting perspective, because we have to make commitments to the government in terms of what we're going to be doing over there, and then to how that will integrate to our facilities. But everything on our land package, I think it's not even just our land package, really everything within a couple 100 kilometers away is fair game.
Okay, and then in terms of exploration this upcoming year, I know you're looking to do some exploration at Las Conchitas and build that towards a maiden resource to be put out next year. You're going to be drilling at San Albino. When can we expect a resource update? It's another resource update at San Albino. And what sort of other regional targets are you looking at drilling? And how do you, I guess this is multiple points question, or multiple parts rather. How do you look at spending money on exploration drilling right now versus just focusing on the mine?
So like I said, there's a tentative approval to have a 50 to 55,000 meter program, and not just drilling, but everything that kind of goes with that, will equate to somewhere between $8 and $8.5 million US dollars for calendar year 2021. Like I said, there's a debate about whether that starts in 3 or 4 months or whether that starts like now, and those are discussions that we're having. Obviously conditional on a working capital facility. In terms of so the question about a choice, right? So this goes back to the fundamental thing about Mako. I want to be explicit about this, because if there's any level of confusion on this, it's this about what Mako is. We are not one. We are 1, 2, and 3, right? So there is no choice to focus on one. That's not what Mako is. It's not what Mako was. Certainly since maybe in the Golden Rain scenario might have been. This has always been 1, 2, and 3, and we do everything as prudently but as quickly as we can, provided that we have the ability to fund it. So the entire objective to getting number one done was to have the cash flows to go and look at everything else. So to say that there's a choice, it's never been. It would be the choice to do what you wanted to do or to not do what you wanted to do. That would be the choice associated with it. Now, where we're going to be focused on, the primary use, at least for 2021 dollars, we'll be doing somewhat more than 50% of the dollars, probably pushing close to 60%. We'll be focused on Las Conchitas, which is going to get not only the infill work on the three targets that we have to the south, which is Mango, Bayakun, and Las Dolores zone, but also to do basically what we've done for the last year and a half, which is to spot check, to get things to like between 35 and 50 meters type spacings on the other 6 targets that we have over at Las Conchitas. So with that's probably about 50 to 60% of the exploration budget is going for Las Conchitas. There are going to be satellite programs going on over at San Albino, both through core drilling as well as even some production blast hole drilling to more quickly look for surface expressions for some of the other on-strike areas that were part of the 2015 resource that we just didn't have enough data to be comfortable putting it in this one. So that will get done over at San Albino. There'll probably be even a little bit of deep drilling as well. And then for the first time ever to actually be drilling on the other concessions. We still have to reapply for an exploration, like a drilling permit on Potrerillos, because when we acquired that from Condor, the government didn't transfer the drilling permits over there. But we are permitted to drill on the red concession. So as early summer of this year, we're going to be drilling, literally putting in the first drill holes in history in that central district, kind of where you see the word Oro in the Corona del Oro belt, kind of in that zone. And if we do hit there, I mean, that's directly on strike to Potrerillos and San Albino. I mean, if we can actually start getting some level of continuity from the double-digit grade surface samples that we've had and released last year, instantaneously, you're looking at something a hell of a lot bigger than even what we have over at San Albino in and of itself. That's a 6.7 kilometers of a structural corridor that we've delineated over there. So we have every intent of finding additional open pittable ounces and then eventually larger scale deposits. In terms of updated resources, the target is actually to get let's go back to what we did with San Albino. So management changed on an interim basis, March 2019. First thing we did was 2 things. One, we actually started to do some greenfields exploration for the first time ever. It's on Las Conchitas. I should say the first time to restart it for the first time in like 6 years. And then secondly, understanding the serious flaws that were associated with that 2012/2015 resource is to make sure that we had the ability to get the information and redo it ourselves. So we had a series of infill programs that eventually grew to 25,000 meters. We did an internal resource estimate. So this is from March 2019 until February 2020. And then from that work, we gave that work along with all the historical drilling over there with our updated geological modeling and gave that to MDA and Steve, who's literally the best guy in the industry to do mineable resource estimates. This is not a promotional document that we have. This is something that we're actually mining and have to achieve and reconcile to. So there's no kind of arm waving around this. We're building. You can see we're building a mine. The only people we would be bullshitting ourselves, right? If we had a bullshit resource like a lot of our peer groups put out there in the market. This is a real resource estimate, but it took a lot of work to get to that point. An almost identical thing is happening to Las Conchitas, is that Las Conchitas had a little bit of drilling. It ramped up a little bit, kind of getting to a level roughly where we were, maybe a little bit less than where we were over at San Albino in that original 2012 resource estimate. That needs to be infilled. We have to do our internal modeling. It's going to take a similar amount of time, and then we hand it off to MDA. Steve said he was going to retire this year, but maybe somebody as equally capable at MDA. With them handling the resource that will probably be out in early 2022, primarily focused on Las Conchitas. And then the objective is immediately before we're actually going to be mining everything is that we'll have an integrated economic study of sorts at 1,000 tons a day. And then that's really, I think, the time that we would have an updated San Albino resource. The primary goal is to have a maiden resource over at Las Conchitas. We may have an interim updated San Albino resource, but at the very least to have an integrated economic study at the very least of those two deposits will be the next time that you'll probably see an update to San Albino.
And while you're working on those two resources, you will be drilling regional targets to kind of bring something else up to the level that Las Conchitas is at right now.
Yeah, no, I think same rules apply. I mean, you can see the pace of drilling in 2019. So it'll be a similar pace to what we're doing right now. And then by the summer, we'll have of the 50 to 55,000 meters of drilling, you probably have a high single digit thousands meters dedicated to stuff in the Northeast.
And you acquired two concessions, I believe, in 2019, or was one in 2020, but in the last year and a half.
We acquired Potrerillos from Condor in December 2019, and then we had La Segoviana granted to us a few months after that. So that purple concession was granted by the government. We have another one under application right now to the east, and then that's really the last remaining concession not in government hands right now. So then that would basically complete the non-government owned land package in the region.
Okay, perfect. That was my question. I have a couple questions on the share consolidation. Is that still in the works?
So as the share consolidation was always going to be in conjunction with an uplist to the Toronto Stock Exchange, right? So we had discussions. It's kind of like a Kafka-esque discussion with some wonderful, hardworking people over at the TSX. But this is the dilemma that we're in, right? Everything that we have from a corporate structure perspective is fine in terms of independence, board setup, everything in terms of check the box to migrate to the TSX. So there's one thing that's remaining for us to do that, and that is to have a funded 18-month budget. Fine, right? So that's great. But here's the problem. Because we don't actually have a feasibility study, the budget can't include any cash flows coming from the mine. And then there was a question as well, is our operating costs going to have to be included if you can't actually have offsetting revenues? And then you have this kind of philosophical debate about checking all the boxes associated with whether or not we can actually supply an 18-month cash flow budget as the limiting step for us to uplist. And after literally going around in circles for about 3 hours, we finally agreed, both sides, TSX and us, to revisit everything after we report June numbers, right? So everything about the share consolidation is intact, but it's predicated on us getting to the TSX, and 100% the uplisting from the TSX point of view, by definition, because of their requirements, has now been pushed back to the back end of this year. So it was kind of an interesting dialogue and a philosophical exercise in terms of what a budget actually means. But that's where we are.
Would you consider a share buyback or a dividend down the road?
Primary use of capital is to do everything we need to do for 1, 2, and 3, right? We're going to generate substantially more cash than is necessary for 1, 2, and 3. Secondly, in terms of our current debt structure, that $15.15 million, the second order of priority is to pay down debt as quickly as possible, and then after that, then it's shareholder returns. It's as simple as that. Like, obviously, along the way, you can have M&A that will require additional equity over there, but this is going to be a self-sufficient project. Beyond that, if there's or refinancing next year or whenever, who knows? that will lower the cost of the debt facilities, that will make it more sensible to focus on shareholder returns than debt repayment. That's fine. But right now, in terms of what we know today, those are the orders of priority. So priority 1, priority 2, priority 3, priority 4 is the debt, priority 5 is shareholder returns.
I think that spells it out pretty quickly. So Akiba, what are your priorities for this year? I'm just kidding. I have a few questions left, and we are a little bit over time, but maybe I can just rapid fire them at you because they're not really thematic. They're mostly just kind of one-off questions. So mill liners, what is the expected gold that will be trapped in the liners? And since you have two, my apologies. Since you have two, will you switch between the two to recover the trapped gold?
The first question is kind of like it's kind of like a trial and error, right? So you kind of have to like track how much gold is coming into the mills and how much gold is coming out, right? Get a mass balance. Our expectations is that we'll probably need to run the mills for a few weeks minimum, somewhere in that order of magnitude. But the same rules apply for both mills, right? They both are lined, and they'll both need to be bedded to a certain extent. But it's not like we can recover gold from one. That liner, there are actually people whose business it is to do this during reclamation, to come into a mine saying, "I'll give you a deal. I'll take your liners and do the full reclamation for free, but you let me keep the gold." Right. So there's definitely some value over there. But we want to try to limit that as much as possible. So we'll run the mills for a few weeks on low grade, and then once we're comfortable with it, but that level of comfortability comes from testing, then we'll put in the high grade after that.
Okay, and then what are your ballpark figures for all-in sustaining costs?
Right. So our target is to get our processing costs down to $60 a ton. So now that might actually seem kind of like an elevated number relative to some of the people that you see in our peer group. Partially, that's because we actually have a fairly comprehensive view of processing costs, as opposed to picking and choosing what goes into the line items. And then secondarily, it's because we've actually made some choices to make this, for environmental reasons, to make this a much more environmentally friendly operation than would be a normal course, right? So the dry stack tailings storage facility, the detoxification plant, and things along those lines. So I think it's going to take a little bit of time for us to get down to $60 a ton. Assuming we are running at $60 a ton, and assuming that kind of like on an average strip ratio for the life of mine, this will have an all-in sustaining cost of probably somewhere in the neighborhood of around $700 an ounce. And it'll take us, like I said, a little bit of time to get those processing costs down to get to those types of numbers.
Okay, and then I just see two more questions. One of them I'm not sure what the acronym's for, so I hope you know. How are the on-site safety LTA statistics?
So just in terms of safety in general, obviously it's truly a top priority for us. I mean, one of the things about the pandemic that we noticed when our key operating guys were down at site is that there was some slippage in terms of some of our metrics. Luckily, there weren't any serious injuries, but we had, I think there was a guy that overturned his truck. Luckily he only had a couple of scratches over there, and it primarily was because we did not have our key supervisory guys down over at site during the summer. It became stressed in terms of our capacity. It's actually one of the reasons why we downgraded our our schedule. So originally, when I took over as full-time CEO, we were expecting first gold pour in late summer, like late September of last year. So it was in March when we first pushed back the schedule to that date. One of the main reasons for doing that is that we did not feel comfortable running the operation at that kind of speed without having our key operating team there to manage it. We actually weren't even certain when they were going to be able to get back into country. It really wasn't until August where they were actually able to do that in any modicum of frequency. So things have certainly vastly improved. Obviously, we were fortunate that we haven't had any serious lost time injuries even throughout the project. We have to. It's kind of an interesting dynamic where remember this is a company where it was a merger of two groups. So it was Marlin, which was definitely focused more on the operation side of things, and there was Golden Rain, definitely more focused on the exploration side. But even on the exploration side, we have to instill a very, very deep-seated respect for safety and procedures. So it was a learning exercise to integrate everybody on the exploration team, even for that. Because guess what? Being around a drill rig is extremely dangerous business, and you have to respect what you're doing.
Well, I can tell you firsthand, I know IR isn't as dangerous as operating a drill rig or being at a mine site, but one of the things that really stood out to me about working for you and Caesar was last March, when the pandemic was sort of starting to get more airtime. Leading up to PDAC, they decided not to cancel the show, but you and Caesar told me not to go stand at the booth because you wouldn't ask me to do something that you wouldn't do yourself. And that's always stuck with me as one of the things I really enjoy working with you too, is you really do stand by that. Safety is important, and you're good managers. You don't ask people to do what you wouldn't do yourself. So I can speak firsthand to that one. And then I've got two more questions. One is, will the zinc, silver, and lead byproducts of the mining be part of the mine's production? Will they contribute significantly to the economics of the mine?
No, at all. We obviously we've got to test the refinery. The intent is to try to keep our doré as limited with the zinc is whatever, but so the three gold associated minerals, galena, so the lead, not a problem. Zinc, sphalerite, not a problem. And then there's the arsenopyrite. the arsenic is you got to deal with it. So if anything, there would be like a penalty for the arsenic in terms of like a negative revenue, like a cost. But no, there's no saleable base metal byproducts associated with this.
I'm sure that's just asked because both of those are, zinc and silver, are kind of timely right now. And then the last question is about your market makers. So PI Financial is being retained as a market maker. How long do you anticipate this continuing for?
Yeah, we've been pretty happy with what they've been doing. So we get monthly reports. Really, the intent there is to just step in if volume overwhelms the liquidity of the stock, and you can kind of see it. I've always found it interesting, just in terms of people's trading patterns over here, is that it's clear that we have a couple of investors that just were oversized in their position relative to what the liquidity of the stock is. To me, if you want to buy or sell, that's great. You just have to be cognizant that we're a fairly a liquid stock. At some point, and actually, by the way, I mentioned this when I first took over. I mean, there's the operations that we need to focus on, and then secondarily, it was the stuff getting the stock to be in a more liquid scenario. Obviously, people could be happy or upset with the share price. One thing that's unequivocal is that we now have about 10 times the trading volume as we did back from Golden Rain. And part of that is to do incremental things with respect to marketing, exposure, trying to be transparent with people with what we're doing. I always kind of like chuckle when people criticize us for not being transparent, can't be more transparent than having like a real-time security camera video of you. Then there's going to be the additional stuff, right? So we raise capital through a syndicated brokerage group that intended to broaden out the shareholder base. We're getting a little bit more antsy with some of those brokers about getting some research coverage on us, because right now we don't have any brokers covering us right now. The entire impetus on the reverse split was to enhance the underlying dollar liquidity of the stock itself. So it's always going to be like it's not going to be a switch overnight, but everything you have to do incrementally. And then, frankly, I think the data speaks for itself over the last 18 months. Unequivocally, we're a more liquid stock today than we were in 2018. Obviously, there's part of that is just the change in the market, but we're the amount of change in liquidity that we've contributed to Mako is even more than what the general gold market has experienced over the last 2 years, and we'll always be working on that in the background.
Perfect. Well, that's it for questions. Is there anything else that you wanted to talk about today, Akiba? I think we've pretty much covered everything I could possibly think of.
That's it. We're starting to get dribbles of drill holes back. I think I'm not sure. I honestly don't even know what happened last year with the fire assay backlog at various assay labs. But even, by the way, even the last reconciled bench, someone had to remind me that we actually mined that half bench before the hurricane, right? So it wound up happening. We mined that half bench, and then we never actually sent the assays because they got stuck on site when we lost access to a lot of the external roads because everything was flooded. So we actually didn't send them to an outside lab until the third week of November. And then it was taking like 7-8 weeks to get back data. I think at the beginning of the year, we were up to 102 holes in backlog, right? So it's starting to trickle out, but it's like, Frank, I'm not sure what these labs are going to do, because like with us, it's we're obviously more than quadruple our drilling towards the end of the year. So hopefully I won't have 400 holes in backlog like we do right now, but hopefully sometime in February we'll be able to start releasing the Las Conchitas, and then even some of the info work that we're doing over at San Albino satellites as well.
Okay, great. Well, look forward to those results, and yeah, thanks for taking us on the tour and answering all the questions. If there's any questions that weren't answered thoroughly, feel free to email me and I'll make sure you get a thorough answer. And I appreciate everyone for participating and sticking with us for 90 minutes. I guess it's shorter than flying to Nicaragua, driving for 6 hours and walking around the site. But yeah, thanks everyone, and I hope you have a great afternoon.